What's up, everybody? This is Jimmy with Trading Decoded. It is September 4th, 2024, and it is 4:20 in the afternoon. Smoke them if you got them. With that said, today's video is going to be pretty short because I didn't really have any useful information to share with the rest of the community after 12 o'clock today. And as you guys know, I took my lunch break at 12 o'clock. Today was right around 12:40. I didn't come back till about 1:40, 1:45. The chart flattened out or got kind of erratic until closer to the close. With that said, there's still key factors that you got to look for no matter what time of the day you trade, because it matters. And more importantly, the 10 o'clock report today was a wild one. It said that job openings was far, like 400,000 openings less than what they were expecting. That's not very good for the outlook of the economy. The market took a big red nosedive very temporarily, and then we went right back to business as normal. Now, I don't think any of us felt like it was going to be business as normal or as usual after a move like that, right? Because we had about 15 minutes of big whipsawing moves down, up, down, up, down, up until we ultimately broke that wedge to the upside, and it started to look like a normal day after that, but it didn't feel like a normal day. But at any rate, let's go ahead and launch the chart. Our opening trade this morning was a fantastic one. I want to explain everything that we were looking for and why we took the trade that we took for a nice win for many and a massive win for others. Pre-market, we stayed in a pretty tight range, all things considered. And then we broke out of it just to hit our first line of resistance. As you guys know, the call put scenario is always based off of a level of support and resistance, right? I get asked this question often. Where did they come from? It's not a mystery. You look at the chart, you look at pre-market leading into the open, and you say, hey, where's the most recent resistance and the most recent support? And then you determine whether you're going to play calls if we get above that resistance or puts if we get below that support. And we try and watch other things to justify our actions, like the Qs or ADD. So today, can we not agree or not see that we have resistance not right at the yellow line, but just above it? We said if we get a candle close above that, we'd be looking for the move to make it up to 551.12. Okay, now from 550.72 to 551.12, that's a pretty good move, a little over 40 cents, right? But if you get lucky and you have a much bigger move, well, that becomes a very nice trade. Okay, now with that said, the put line, again, we want it to be a little bit less aggressive. We put the put line on our pre-market midline, okay, which we bounced off of on the opening trade. We never broke it. We never breached it. We never closed below it. If we did, we'd be expecting it to come down to the pre-market low line, which, by the way, was a solid level of support, okay? So at the open, we're waiting, and I start to recognize that the Qs were not only struggling to move lower, they were also struggling to get above the pre-market midline. And I said very clearly, as clear as day, that if the Qs get above that pre-market midline, I'm going long. If that happens before we cross our call line, I get in a little early. Qs got above that line, I got into my trade. Qs kept going until they hit resistance at 934. That's where we should have gotten out of our trade. I got stopped out on the very next candle because we closed above resistance here. I was hoping we'd get up to the next resistance. That's all. Qs hit that level of resistance and couldn't move higher. They did put in higher lows, which means we got to stay away from puts. Okay, puts, higher lows are bad for puts, lower highs are bad for calls. Just remember those two things. It will save you a ton of heartache. Not every time is that true, okay? But let's just look at every time we put in lower highs. If you would have bought calls off support, how well did it work for you? Lower highs, okay? So you're going to buy calls off support right here. Well, you would have gotten a little bit worried there, wouldn't you? All right? Likewise, We put in higher lows and you're thinking, I'm going to buy puts at resistance. Okay, you have resistance at this orange line, higher lows. How would have that worked out for you? Not so great. Keep looking at these. At some point, it's no longer going to be an uptrend and we will break support and we'll head down to the next support. This is the case here, right? We broke this support, we moved down to the next support. Now, I'm not interested in buying puts normally until not only do we break the uptrend, and again, this is something, two criteria always. If we're trending up, and I'm sorry I'm using the Q's chart, this is the case for any chart. If I'm trending up, there's two things that I want to see before I would take puts, always. Okay? Number one, I want to see a close or a break of that trend, up or down. Check. And I want to see us take out the most recent higher low that exists after we break that trend. Well, that's here. Did we take that out? We did not. So I'm not getting into puts here. If we close below that support and I look and see that there's room for more to the downside, meaning more than 20 cents or more, then I'll take the trade. Even if we close below this, the next support was less than 20 cents away. I wouldn't take it. But if we close below that one, then you have a 20-cent window. That's when we would consider the trade, okay? It's not a mystery, guys. This is the stuff we teach in here all day long, every day, and we watch it work over and over and over again. Not 100% of the time. Nothing works 100% of the time, but it works more often than not, and that equals a higher win rate, okay? So the first trade we took was based off the Qs breaching their pre-market midline because they were struggling to do so, but they were definitely struggling to move lower. And then that worked out. It also helped that ADD was on a massive tear to the upside. It just took a second to pick its direction, but that was comforting when we're trying to take calls. Okay, the next one, same thing. If we can get above resistance here, okay, 941 Qs, I think we're breaking above resistance as well. Where was it? Yeah, we said if Qs can get through that first target high, which is this here, it's going to move up and SPY is going to go with it. Now we had people take this trade. It was a quick entry. Again, you're coming off higher lows. Okay, higher lows are bad for puts. So you might not have taken calls here, but you surely should have been staying away from puts because some people look at this and say, well, we have a double top there, Jimmy, right? We have a double top there. Why would I not just buy puts there? And I will tell you this, because the fact that we put in a higher low is telling you that the buyers that stopped it from moving lower here are advancing their position upwards, meaning they're getting more aggressive. The buyers are actively trying to push the price up. We don't know if they're going to be successful or not, but this higher low is not a good sign for your puts. Please, if there's anything you take away from my videos, remember those two things. Higher lows are bad for puts, lower highs are bad for calls. Now, there will be times that you avoid taking puts here, and that resistance does hold, and we come down. You're going to feel like it happens every time that you skip a trade. I'm telling you, statistically speaking, by a large amount, higher lows are bad for puts. Okay? Even if that doesn't mean you take calls, just watch how fewer losing trades you take following that simple rule. I'm telling you, just try it. Okay? The next trade we took was break of resistance. I'm sorry, I got a cough drop in. Yes, I'm getting sick again. Thank you, Logan, my son. We were looking for it to at least make a move up to the next line. This is the first line that we have a nice amount of space to go, and we covered it, okay? I wasn't in that trade. I'm still doing one and done. I'm only 6 days into it and pretty happy about it, actually. So my workday was done at 9:35 this morning. Now, I was on the mic all day, but as far as trading goes, got in at 9:32, out at 9:35. It was a 25.2% win. I'll take it. Contracts were a little expensive today, but still made good money. A lot of people made good money. We have a very green poll today as well. And we had a lot of people one and done. Then 10 o'clock came. 10 o'clock came. We never hold through 10 o'clock candles. And this right here is why. You don't know, but I've seen this happen plenty of times, and I've been caught up holding through 10 o'clock. You know who holds through 10 o'clock candles? People who are already in a losing trade because they hope, especially if you were in puts, that 10 o'clock candle saves you. Sometimes it might. If you were holding puts today, you got rewarded for getting lucky. If you were holding calls, ignoring 10 o'clock, you got raped. You got destroyed. Okay? Unless you held all day. And a candle like that will turn a whole bunch of people into holding hopers. Okay? So you might have been okay had you held on to your puts, or your calls rather, through all of that. Because ultimately, it finally picked a direction. Oh, by the way, higher lows. You big old wedge right here. Big old wedge. Higher lows, higher lows, higher lows, wedging up against resistance. And guess what? We close above resistance, turn it into support, and it continues up. It happens all over the place, guys. Just play with the trend. The only other two trades we talked about after the first two in the morning was an aggressive counter trend trade. We're coming off a resistance that had been tested 5 times, okay, failing to move higher. And Q's doing the same thing at 1107, okay? So the Q's were up here. Actually, the Q's already started to reject. And I told everybody, if the Q's get below 463.71, they could move all the way down to the next support, which is 462.78. Q's get that close at 1108 below support. Their next one down is all the way down here. As long as we keep that support acting as resistance, go baby go. Here's your entry. This is when Q's made it to that support level. Okay, so counter trend trade. When we do counter trend trades, we are looking to take entry at a break of the most recent. We just talked about this earlier in the video. You got a trend line. Okay, we closed below the trend line and we took out the most recent higher low, at least on the Q's rather. Okay, that was here. Now, a lot of what we do is watching the Q's. Okay, you got to close below that and it took out the most recent higher low. Where's the next support down? Because that's where we're thinking it's going to go. All the way down here. Now, for somebody who didn't take that trade, the other thing you need to start recognizing is lower highs. What did we talk about earlier in this video? Lower highs are bad for what? Calls. You got it. So should you be buying calls on this support? It held here. No, you shouldn't. Why? Because the sellers are getting stronger, not weaker. They're more likely and putting more pressure on that support. Expect that to fail, not hold. Does not mean you have to take puts. Just means maybe think twice about taking calls. Same thing happened here. We're putting in lower highs off of resistance. I said, guys, this is a lower high. I wouldn't be buying calls down here, even though it's been tested a bunch of times. I'd be looking for puts if I'm being aggressive. So before we even broke the support, we were looking to get in and we got graced with a nice, sizable move to the downside. Q's followed as well. Okay? Q's followed as well. Right down. Beautiful thing. That was it. After that, shortly thereafter, I took lunch right around 12:38. Like I said, we moved up, we came down, and then it just turned into not so lovely. You get pullbacks like this later in the day on zero DTEs. It gets very, very difficult to trade. It's very difficult to be successful. Okay. My win rate late in the day is horrific. So instead of trying to find a way to continue to trade and bug out watching charts all day long, I said, you know what? I can improve my win rate pretty easily. Just stop doing what doesn't work for me. Start to figure this stuff out, guys. You need to be well aware of what isn't working for you, and the resolve may be far simpler than you think. You might be able to just stop doing that, and naturally, your win rate will increase. It's the craziest thing. Okay? So we're going to wrap it up. If you guys got any useful information out of this video, please like, share, and subscribe. If you'd like to join our Discord community, we'd love to have you. There's a link down below. I did change the annual membership price to be $600 all the time. No coupon code needed anymore. This is just going to simplify my life and people not having to wait for the quarterly discount. So if you're interested in that, it does reduce the price that you pay from $100 a month to $50 a month if you choose to do so a year in advance. Okay? And that's pretty much it. So I hope you all did well today. Till tomorrow, I love you guys. See ya!